Now let's take a look at low time frame targets and how we actually formulate good targets for our intraday work. For this video, I'm going to show yet another example. This is going to be a New York session trade, and it is within this structure here. So the idea for this trade is a very low time frame one. We saw the Asia range here. We've had a large drive up. The market has now pulled down, and it is beginning to make a little bit of upside movement. But what we have here are two equal lows and an open imbalance into this area here. So what we could expect is before the market continues up, we are going to fill this imbalance. And as simple as it seems, that is essentially how we formulate our targets for our intraday work. Usually, trade targets are one of the first things that we identify when we are trading low time frame, as opposed to the high time frame where we're working out a basis to buy from. We are essentially looking for the areas to target before we even get into formulating positions here on the low time frames. Because what we're doing is trading within ranges, right? We're not looking for huge swing moves. We're looking for, okay, looking at this structure here, well, where is the market likely to go? Well, I can see that we've seen here a higher high, a higher low, indicated by this wick. On the low time frames, this is more visible, as we will then see. But then we came up, we formed a lower high. We then came down and formed this lower low. So we've had a break of structure over this point. Now we have two equal lows and an open imbalance. So for the target for this trade, we could very well be looking for something like this. Now, I will note around 50% of the positions we get into on the low time frames, we will not actually complete to the target. Because like we showed you in the previous video, and like you'll see again in the management, these trades are more prone to be tapped out. But that's because we scale so much into them that we want to continually trail the stops. Probably around 50% of all the trades we take will get stopped out before the target is hit, but that is with scaled positions added on. So the amount of profit you'll make is much larger than if you just left the original position to run to the target anyway. So for finding targets, we want to find areas within the current range that we are trading into. Now, as we can see here, the range we're working with is simply from this low to this high, and identifying the structure here, which is obviously going to be first a break there, and then a equal low formation. Well, we can clearly see now that if we look here, there's going to be a nice position down for us, like this, giving us a target at that level there. So how do we formulate the position around this? I'm going to show you that on the lower time frames, and we will carry out this process. Then I'll show you one or two more examples within this video of formulating targets, because it's obviously a very quick process, so it will be good to see quite a few different examples. So scaling down to lower time frames, what we can see here on GBP USD is this large push down. Then we had these two generally equal highs. We can see here we have a few imbalanced zones. Well, this one has just been swept over, but this zone here, if we mark it on, has actually not been retested. Came very close to being retested, but it wasn't retested. And the reason that this is a high interest zone for me, for my trade, is because this is the zone that first started to break down the structure. If we look here, we have higher high, higher low, higher high, higher low, higher high, higher low, then we have a lower high, and then we have this large push down caused by this candle, which really began to first push through all of these previous structure points, including this one, and shifted us into the bear trend. So after seeing a retest of this level, we could happily be looking for a short. Now, I'm going to go with a manual execution because we are late to the party. But generally, you'd be looking for a sell limit within this region, which would give you a better trade. But for realism's sake, let's go with a manual execution from where we are, targeting that low just there. And if we allow the trade to then play out, we see that we do get quite a nice drive down towards that target. So why do we actually focus on targeting just areas within the range? Well, the reason being, we can see here we're in this uptrending fashion, right? Now, there's always the chance the market's going to come down lower, but because we see a very clear open imbalance here, that is a good target for us. The reason being, if the market fills this region, it's likely to then make a move back up. Now, I'm not sure what it did there. Should we have a look? So we can see in this instance, we did actually get a reaction from that level. So obviously this would have been the best place to close the short. Now, it may continue further. I am not sure. But for now, this is a solid target. That is a 5.32R position executed manually, which could have been a much larger position had we executed with a sell limit. But it's a very clear target, right? So we are just simply targeting areas within the range that the market is then likely to trade into. In this instance, this was our range. This was the imbalance zone. This was the structure shifting to tell us that we could sell into that. And then we got that nice short and we brought it down towards that zone. So very simple stuff. And in terms of the target, it was defined as one of the first aspects of the trade. So let me show you another example now. And this example is actually going to cover a 1 to 52R trade that I took very recently before filming this video. Those who have been in the academy for this long will have seen this position play out from start to finish, from my execution all the way to my closure at 52R profit. Now, the basis behind this trade is very useful to know and very interesting and important as well, because this uses an initial target, but then with a larger target in mind. Now, if we go up to the higher time frames, the hourly and so on, just get an idea for what the range is doing here. Well, if we just break down what's happened by trying to build a narrative for the market, we can see that we had a low point here, right, coming out of this downtrend. We then had a large push up, and from there we were trapped within this range. We had this high, and we have this as the range low. The range low is actually down to this wick now, but what we saw here was a large range forming, and then the market pushed down with this wick, traded into a demand zone like this, and then from that demand zone actually went and formed a huge bullish rally or a large impulse to the upside. So we hit here, and then we had a new bout of strength brought into the market. What I saw here was a lot of imbalance left open. So I figured to myself that, okay, even though we have broken a couple structure points here, and the market could now be due a rally to the upside. So let me just mark those structure breaks on. We have one there. We also have one here. Even though we've broken these structure points and the market could potentially run to the upside, if it's going to do that, I believe it's going to do that after we've had a fill of the imbalance to traders somewhere into this area before then moving to the upside. So this was a larger swing view of what I expected the market could do if it sold off. Now, if we go down to the low time frames, the 5 minute is actually where I executed this position. You'll see the reasoning behind the trade, and it actually does intertwine with the Asia sweep. So we saw here a high in the trend formed, and then we were then trapped between this range here. Okay, we have the low of the range there, and we have the high of the range here. So we have a new range to work with on an intraday basis, and this is my trading hours just coming out of Asia and into London. Bringing the Asia sweep ideas that we spoke about, now these can be brought into a lot of areas of your trading. We have the Asia high and the Asia low. The Asia low has been swept. We've then seen an impulse which broke this structure point and this structure point, and we could potentially look for the market to push towards the high. Now, as I said, before we ever formulate a trade, we are looking for targets first, essentially looking for areas that price is likely to move into, because that's where we then formulate the position to either trade into or out of that area. So if I now go down to the 1 minute time frame, well, what do I have? I have an idea that the market could indeed pull back, retest some of these demand areas, and then make a push up to the high. And that is my low time frame basis for a trade, right? But the overall picture also tells me that we just looked at on the hourly and so on, that we could potentially see a sell-off all the way down to here. So I'm going to keep these two things in mind at the same time and take a position around them both. Now, what have we seen then? Well, we see here the market could potentially be turning bullish from this demand zone here and also from the imbalanced demand zone below. But what I can tell you is that now the structure has broken. As we can see, we have higher high, higher low, higher high, followed by a large bearish impulse into a lower low. Now that this structure has broken down like that, that tells me that the market could indeed flip to the downside and is very, very likely to at least come and fill this imbalance. So what I could now look for is, all right, we have a supply zone up here at the top of this impulse. This is the zone that broke structure, so to speak. So what we could go ahead and do, because we know that really the market has to fill this imbalance before moving up, even if it is going to continue that trend up, is we could place on a trade that targets this zone here, right? So what we can do is get our sell limit, drop it on there, stop over the high. In fact, I actually put my stop 1.5 pips. I entered from the midpoint, but for this example, we're going to go for a low point entry because this is what I'm teaching you to do. This is when intuition comes in a little bit more and you've actually learned the system. So maybe we'll have future update videos on that, but we'll roll with the standard system for now as a 2.4 pips stop. Why do we use that stop? Well, if we look here, the high point formed a supply zone here. This supply zone has been retested twice, showing that that's efficient. And then after we form this next supply point, we then sold off. So this is how we formulated the target for this trade, right? Very clear and balanced area. And even if the market does go up, we are expecting that area to be filled. So what we can do is just put an order on. And if we do get that fill, we should get a nice trade down, which in this instance for myself was a 9.2R trade. But in this instance, following the system directly, is a 5.75R trade, which is tremendous anyway. So as we see, the market did come up, trade into that supply zone, and then began to sell off. And the sell-off brought us all the way down towards that target at that 5.75R target area. Now from there, the trade did continue. And because of that higher time frame picture that I had the higher time frame targets in mind, right? So what I actually did was closed 90% of my position at this level and left 10% of the position running. Now, if we go over to the 15-minute time frame, you will see that, keeping this target in mind, the higher time frame target comes through perfectly, and the market actually continued to extend much further than that. So my trade was a 1 to 52, but if we extend this out as a 5.75, you can see that we extended that last 10% of the position to a 31R trade. Now, obviously, only holding 10% of the position, this is not going to be a huge profit gainer in terms of percentages, but what it is an amazing risk reward, because here you're essentially risking 0.1% to make 3.2%, all right? So you can imagine 0.1% is literally unnoticeable risk. And making 3% out of that, 3% is a very healthy gain, enough for a whole week. And how we did that was very, very simple. We had our initial target, which was a very clear target on the intraday perspective, but then we saw on the higher time frame basis, there was also a high time frame target. So what we did here was close the majority of the position at our basis target and then allowed some to run, so that if the buyers never came through, as we did originally expect them to, we could capitalize on the move down. And that is exactly what happened. So in this example, you've seen an idea where we used an intraday target to take some profits, and then we extended that out into a swing target for a massive risk reward gainer. And for our final example here, I actually have two positions entwined in one position, and we find the targets by actually just picturing the basis of the trade. So let's do that. We can see here on the Euro USD 15-minute time frame, we are trading clearly within a range, right? We are topped here, and the low of the range is all the way down at the bottom of this large candle. So we have our range to work with, and if we look at the range here, well, we can see first of all this leg, and then we moved into this very tight consolidation. If we look at the current structure here, we've seen a push down, slow grinding sideways action, very clear downtrend though with lower lows and lower highs. Then we hit this demand point. So we can see this doji candle, which was the final imbalanced candle before that large push up. Saw price come into that area. After hitting that area, we had a large impulse to the upside. Now what this has done is shift us into a bullish trend, but only momentarily. We don't know how long this is going to last. But because we've now shifted bullish, we can consider, okay, where are the areas of interest for our trade? Well, the first major area of interest for me is going to be this area here at the top of this imbalanced area. So a supply zone at the top of an imbalanced price move. Now we can also see that we do have a very small supply area that price is traded into here. And we know that if we want to pull it up, well, what do we want to do first? We want to fill imbalance. So just building a picture for the market, if we grab our demand tool, we could look towards this demand zone here, being the zone that broke structure, and the extreme demand that's imbalanced as well. We could picture that the market could potentially react from this supply, make a pull down, hit this demand, make a push up, and then when we hit this, we have no idea what the market's going to do. We could sell off and continue with that downtrend within the range. We could push higher. But it doesn't matter to us, because if we can get this basis and we can use this basis that we have for a potential pull into here and then a pull into here, we can get one or two brilliant trades. So now dropping down to the very low time frames here, namely the 1 minute for this example, now that we have the overall picture of the trade, well, we know that we have a bearish target and we know we have a bullish target. So what we could do is see if structure is going to provide to us something very interesting. And as we can see here, we do have the first signs of a flip from bullish to bearish. So we have this point here and this point here, and this is going to be where we really flipped. We have higher high, higher low, higher high, breaking down to a lower low. So we can now look towards these supply areas, namely this point here being this last candle before the impulse, to sell from. So if we go ahead and drop a sell limit order on here, we'll clear the high with the stops for around a 3.5 pip stop or a 4 pip stop, and a target into that demand zone on the 15 minute. We could then look to sell down into here. And if we allow the market to play out, we'll see, will we get triggered? Will we get an entry? As we can see, we do get an entry. A nice secondary tap, which would have got us in regardless of spreads, and then a pull down towards that area. Now, as you can see, that's trade one already complete, and that is a 5.2R gainer. And how did we find the target? Well, we found the target using the higher time frames, right? So the other idea would be a long position from this point with a stop below, targeting into the high. Now, as you can see, this would be a risk entry. We spoke about risk entries. It's also possible to catch a confirmation. So let's see if the risk entry is triggered. And if it is, we will then have a look if any confirmation entries came about as well. As we can see here, a very quick tap in and run here on this lower time frame trade as well. Almost fulfilling that target, we didn't quite, but obviously in a real life scenario, we would be able to manage that position a little bit better and close off the profits as we go. So you saw on these two positions, we had, first of all, a nice shift to bearish, which was indicated only 15. If we go to the 15-minute time frame, this is where our targets were found. We had the supply area here, this kind of breaker area, and the last point of supply before the sell-off as a target for buys. And then for the shorts, we figured, okay, now we've broken out of this bearish range, reacting to this demand zone. If we're going to buy up, we're first of all going to sell down into it. So we look for the sell down with the right structure, which we got, and then we can look for a buy back up, which we also got. But it didn't quite fulfill the target, but we did actually manage to get quite a nice profit out of that regardless. So that is the process of finding targets, okay? The overall way that we do it is by simply finding a basis for trades, finding a basis for the current direction and the areas of interest that price is likely to move into, and then just trading with that as we go. Now you're going to see more examples of the trades playing out, but I do think targets is one of the biggest things for intradays, and it's very, very simple as well, considering it is based on just finding areas that price is likely to move into. When we're on those higher time frames, the hourly, the 30-minute, and the 15, we're looking for a basis for an intraday trade, right? An area that price is likely to move to either fill an imbalance, hit a supply zone, hit a demand zone, or take liquidity over Asia highs and lows. These different things we've spoken about can then be used to form a basis for trades, and we get that benefit as well, like the one we just spoke about, where if we get a bullish push and we are looking for a pullback to buy, we can then actually go even lower and look at the structure, and potentially it's going to give us a sell into the buy like we saw here. So finding targets is quite simple for low time frame trades. We just want to find out what is the market doing, where is it likely to go, and how can we take advantage of those back and forth moves. So I hope you found this video beneficial. I hope you've enjoyed those examples. And in the next video, we are going to move on to stop losses. How do you position your stops on a low time frame basis?